You and I have spoken in the last number of years about all kinds of things.
We have.
Today it's about elections.
Yes.
How much they matter for you and your clients.
Well, everybody's focused on it. I mean, today's a big day. It used to not be this big, but now we're focused on it.
We didn't even know. The midterm elections were never a thing. Now they're a giant thing.
They are big right now.
Not sure why, but there we go. Yeah.
But right now, I think today, tomorrow, everyone's focused on it. Long term, we're going to forget about it unless something drastic happens.
Okay, define from a CNBC perspective. That's what we're talking about.
Correct.
That's what we do.
Yeah.
Okay, define drastic.
Drastic is something that nobody expects, which would be a Democratic sweep, if you will, or less people expect a Republican sweep as well. If we have in between, if we have a Republican Congress, a Democratic Congress, Republican Senate, nobody's going to care in 3 weeks. But we do have history on our side. The S&P has rallied up 16% in the year following the election. So at least we got that going for us.
Do you think it's just maybe less the exact outcome and more that there will be some clarity and an outcome?
I was going to say that. People just want to know what's going on. People want clarity, and then we can refocus on earnings.
Although tomorrow we're going to start talking about the presidential election. You know that, 2020.
That's 2 years away.
No, but you know, tomorrow that's the narrative.
We are, yes.
Okay, it's either going to be a mandate or some sort of, whatever it is.
Yeah, but we're trying to refocus everyone on earnings. I mean, the S&P has grown. Earnings have grown. Everything is pointing in the positive direction. Unemployment's at a 49 or 50-year low. So if we refocus everybody on that and stick to our long-term goals, we still think the market has a good 12 to 18 months to run.
Okay, earnings have been, I hate to use a term like spectacular necessarily because it's hyperbole, but up 24% year over year. History says those are pretty spectacular numbers, but I'm looking at a Dow that's up 3% ex-dividends this year.
True.
Why is the market is not reacting that well to earnings? Because apparently it's looking out, not back.
Well, I think it's also not reacting well because there's a rotation in the market. We saw a lot of the high-tech technology companies, low earnings growth companies performing well. We're seeing a total rotation in the market, and people are going to start refocusing on earnings, which is going to drive the Dow.
You believe that after the midterm, after sort of we get some clarity, we're going to start focusing on earnings and corporate numbers again.
Yes, I think especially for the next 12 to 18 months, because look at the tax stimulus really hasn't hit yet. Nobody even has mentioned.
Yeah, but there's a talk that if the Democrats take the House, as many of the polls expect, although my viewers, I polled them yesterday, they found it about an equal chance between the Republicans keeping the House as well, maybe kind of a surprise thing. Either way, the Democrats get the House, they're going to try to roll back those tax cuts, or part of them.
It's still going to take 12 months. Even if that does happen, those stimulus are in play for the next 12 months minimum.
What about things like infrastructure? They say if the Democrats take the House, we're more likely to get an infrastructure package because the Republicans have been more opposed to it.
Look, the infrastructure package will be great for America. We need that. I mean, you go to other countries, our infrastructure is subpar at best.
I walked here
compared
because it was that bad.
Yeah.